Hello, today we are solving May 2019 paper Unit 1. Bob's Material is a retailer. Okay, Bob's Materials is a retailer of building materials. Bob's Material has two departments, a shop and a timber yard. Following balances are given. Okay, and now the following additional information is available on 30th April. So let's change because of let's make the changes because of these additional information. It says first, a sale of goods from the shop with a list price of 5,000 had been recorded as sale of goods from the timber yard. The customer had been given a 20% trade discount. Okay, 20% trade discount. That's what here they are saying. So we can see that a sale of goods from the shop. Okay, now do the working here. Okay, it says that sale of goods from the shop. Okay, shop sale. Okay, is around with a list price of 5,000 and they had been given a discount of 20% trade discount. So you have to account 20% trade discount you would have given, okay, wherever you had made sales. So that is going to be equal to 4,000. Okay, this was the amount, but what had happened was this sale revenue, okay, this which was made, okay, from the shop, this was shop sales, but it had been recorded in the timber yard sale of goods. Okay, timber yard sales. So timber yard sales reduce, okay, you have to reduce by 4,000, and shop sales you will increase, okay, you will increase the sale amount by 4,000. okay, so now the shop here we can see that the revenue was, okay, the revenue is going to be around 231,000 plus the 4,000, okay, plus this value which you had got. So that's the adjustment you will have to make. Okay, so that is equal to plus of 4,000. So plus 4,000. So the total shop sales will now become 235,000 pounds. Okay, now the same thing you will have to subtract from the timber yard because it had got recorded in the timber yard sales. Okay, instead of the shop sales it had got recorded in the timber yard sales. So you will have to subtract from the timber yard, okay, 4,000 pounds. So that is going to be equal to 149 minus 4,000 will be 145,000. okay, so now the revenue is going to, we have to adjust. Okay, the revenue has to be adjusted. So this is the revenue adjustment. So the shop sales will increase by 4,000. So which means that shop sales will become 231,000 plus 4,000 pounds, that is equal to 235,000, and timber yard sales you have to reduce by 4,000. So minus 4,000, that is going to be equal to 145,000. okay, so this is the thing, adjustment for the first one. Then you will you can see that during the year the shop was repainted. Okay, the paint costing 700 was taken from the shop inventory to carry out the repainting. So if you go and see the inventory, okay, you have taken it from the inventory, so you will have to reduce the inventory by 700 cost. Okay, this one, it will not be 16,300, less 700 we have to do, and the shop repainting cost, it is going to go up by 700. So 700, 800 plus 700, okay, plus 700, so that's going to increase is equal to 1500. Okay, the shop painting cost is going to increase by 1500. Then the next one, it says that the inventory, this is the closing inventory, this represents the closing inventory. Okay, which is given. This is the closing inventory which is given. Then you have, okay, the rent of 2000 was accrued and insurance of 1000 was prepaid. Okay, you go to the rent, rates and insurance here. Now it says that whatever, okay, was 17,000, this had got accrued, means you have to include, you have to add extra 2000, and whatever was prepaid you have to subtract. Okay, it is not incurred in this financial year, so that is 3000 was removed. Okay, that you have to remove, so that will be equal to 17 plus 2, 19 minus 1, 18,000 pounds will be the rent, rates and insurance cost. Okay, that's the adjustment you will have to make here. So then commission receivable for the shop 3000 was outstanding. So you go to the commission receivable, so it is no more 9500, it is plus 3000, so that is going to be equal to 12,500 pounds. Okay, for 12,500 it is no more this value, you will not take this values. Okay, you will have to adjust these values. Then you can see that, okay, this has been accounted. Then it says that on 20th April 2019 in the timber yard, costing 12,000 pounds and with an accumulated depreciation of 9,000, it was sold for 3,000. The payment was received by check. So we will first check if there was a profit or loss by this sale. So cost is equal to, okay, any profit or loss during the thing, it will become other income. If there is a, okay, if there is a profit, it will become other income. If there is a loss, it will become under a cost. So it is nothing but the cost minus, okay, the total accumulated depreciation of the equipment, okay, which was there, plus the value or the check given. So whatever is a check paid, okay, the amount paid, check received. Okay, so now let's calculate if there was a profit or loss. The cost is 12,000 minus of accumulated depreciation was 9,000 and they received a check of 3,000. Then there is no profit or loss, so it is nothing. Okay, there is no profit or loss. Okay, this is a thing for calculating if there was any profit or loss during this transaction. Okay, there was no profit or loss during this transaction, as we can see. Okay, but we have to account whatever they have replaced, and they have also bought replacement of an equipment costing 16,000 was purchased by check. Okay, so it is going to affect, check bank is going to get affected and the equipment in the timber yard is going to get affected. Two things. Okay, first one is, we can see that the equipment, okay, the equipment in the timber yard, okay, this is the equipment in the timber yard. Now they have sold this equipment, okay, worth, they have sold the equipment costing 12,000. So let's reduce it by 12,000, and they have purchased new equipment costing 16,000. So that means 36 minus, okay, 36 minus 12 plus 16 is going to be the cost. So 36,000 minus 12,000, okay, minus 12,000 plus 16,000. So that is equal to 40,000. 40,000 is going to be the new equipment cost, okay, at cost. Now what will happen to the depreciation here? Okay, we have to remove the one that has been sold. So, and we have to calculate this year's depreciation. The accumulated depreciation, okay, the depreciation of the equipment that was sold was around 9,000. So you remove that. So that is going to be equal to 21,000 minus 9,000, that is going to be equal to 12,000. Okay, now no more this depreciation charge you will take. The accumulated depreciation for the equipment at timber yard is going to be at around 12,000. Now, okay, this is the, then we will calculate when we are calculating the depreciation cost, and due to this there was no profit or loss. Okay, and the other one that's going to get affected is the bank. Okay, the bank is we can indicate, okay, we can make the changes. Bank overdraft, okay, so you know that in the bank, okay, the debit is in and the credit is out. Okay, so bank overdraft indicates 24,800 was there, but and also they have got a check. Okay, so they have sold for 3,000, so which means that here the bank you can adjust it for, okay, they have got a check for 3,000 and they have also paid, okay, and bought 16,000 new equipment. This was not recorded in the books, which means double entry has not been done. So they have minus 16,000 further. So that is going to be equal to, okay, so 24,800. okay, this was received. Okay, this was bank overdraft means, okay, so 24,800 it was at the overdraft. So I am going to reduce it and again increase the overdraft by 16,000. So minus 3,000, okay, plus 16,000. So 37,800 will be the overdraft for the bank, okay, because of this transaction. So bank will become 37,800. okay, now you understood, because the bank was at overdraft, it was not in a positive balance, it was a negative balance. So, and negative balance, some amount from the negative balance, some amount was received. So I am going to subtract, and some more amount was paid from the bank. So you will add up, and that's why bank overdraft changes like this.